One of the most common questions I get, can I use my Berkshire Hathaway purchase as another form of an ETF instead of SPY and VOO? And I get the question. It makes perfect sense. Warren Buffett has been the best accumulator of wealth in the history of the world, over a 20% annualized return going back to the 1950s. No one touches it. So the question of can I use that instead of SPY or VOO is a great question. I think over long periods of time, Berkshire is likely to beat the market. But Warren Buffett, in his annual letters and annual messages, always says, guys, as we get larger and larger and larger, it'll be harder and harder and harder for us to beat the market. He has said before, if I had $1 million today, I think I could get 50% returns per year. Actually, he says, I guarantee I could. The smaller amount of money you're dealing with, the higher the potential return. Berkshire Hathaway not only has $100 billion plus in cash, they have hundreds of billion dollars in stock and businesses. They own, I think, 92 businesses or something like that overall in full, plus this stock portfolio. This is as of December 31st of 2021. American Express, Apple, Bank of America. Guys, you know all these companies. Coca-Cola, General Motors, all these companies here, US Bank, Verizon, they own tons and tons of shares. Look at these values right here. Their cost basis of $105 billion, the market value of $350 billion, plus the dozens and dozens of companies they own in full that spit off cash flow. So Warren Buffett himself has said, I'm a buyer of Berkshire stock when its price to book ratio is less than 1.2. So what does that mean? Price to book ratio is the market cap of the company divided by the book value. And book value is basically equity in the business. So to figure it out, the market cap of the business is $690 billion. So 690 divided by whatever the value is has to be 1.2 or less. So to do math real quick, 6.9 divided by 1.2. We want their book value to be greater than $575 billion. If it's less than that, Warren Buffett says he would not buy it. So let's go to our balance sheet and find out what the book value is. The book value is $506 billion. So a little bit short of that. Again, he's saying he'd be a buyer all day of that company at $506 billion. So the question you have to ask yourself is that worth it? I don't know. And I don't know if you should replace SPY or VOO because of this one thing. Warren Buffett always does worse during booming bull markets. The thing I heard the most in the last 2 or 3 years is, Paul, why are you always quoting Warren Buffett? He's so past his prime. Look at his performance in the last 10 years. Now, suddenly everybody's like, wait, Warren Buffett's pretty awesome because his performance is doing very well because the market's down so much. Every great value investor has their best years when everybody else has bad years. And that's a good, to me, hedge for downturns in the economy. Does this mean, he's even said 3 times in Berkshire's history since he's been the owner, has the stock fallen over 50%. It will happen again in the future. And let's not forget, he's 92. Charlie Munger's 98, 99, whatever age they are, they're very old. At some point, they're going to pass away. So you have to ask yourself, do you trust the line of people coming to run his business afterwards? I personally trust Warren and Charlie to pick the right people. They find people who don't need to be billionaires. They're finding people who want to manage the businesses and keep the cash flow going. I do believe that Berkshire Hathaway will be buying back shares in the future with the extra cash they generate, which could lead to higher returns for their investors. But again, you must pay the right price for the company. So if you're willing to be wrong when the markets are booming and put a portion of your portfolio to Berkshire Hathaway, maybe that's a good move. That logically, it makes sense. But still, I will preach till I'm blue in the face. The best way to do it, to never ever worry, are you beating the market or not, is buy SPY and VOO every single month and dollar cost average into them. If you want to add Berkshire to that as a way of getting some extra return over long periods of time, as long as you're able to be okay that your Berkshire stock isn't doing as well during booming times, I think you're okay. Now, I will say this. If you go look at Berkshire's history, they do the best when the stock market does worse. And I think based on today's values of the stock market, the next 10 or 12 years will be very difficult for getting good returns in the stock market, and Berkshire might be the right place. Now, for those of you out there who are saying, but Berkshire stock is 500,000, whatever the number is, remember, they have Class B shares, which are a lot lower. The Class B shares are currently $312 a share. So it allows somebody to easily go buy 1 or 2 shares a month if they want to on top of their SPY or VOO or whatever market-based index they choose to own. Now, that's the stock portion of Warren Buffett and Berkshire Hathaway's portfolio. He also has segments for all of his other businesses, and it's also in the annual report right here. And we have the 2019, 2020, and 2020 numbers. Now, one thing to keep in mind, I want to get rid of this investment in derivative gains and losses line. And the reason being is the IRS and SEC just required every company to report increases and decreases of their portfolio of stocks as earnings or losses. Warren Buffett and Charlie Munger don't agree with it. They still have to do it, and I don't agree with it either. I believe you should wait until there is a sale of a transaction because it shows too much volatility in earnings. But here are their categories: insurance underwriting, insurance investment income, railroad, utilities and energy, manufacturing, service, and retailing. Obviously, other has a lot of other things in here, but we're not going to follow them. But look at these earnings numbers. 325, 657, 728, 553, 5 billion, 4.8, 5.4, 5.1, 6, 2.8. The whole point is, guys, these are big numbers. And as time goes on, they've done a good job buying these companies at good prices where the cash flow and the earnings will continue to increase, and they'll keep investing back in the business over and over to make those companies sustainable and long-lasting companies. And that is what you're buying when you're buying Berkshire Hathaway. But again, I cannot stop repeating, if you overpay for Berkshire, you can do poorly. The key is to wait for the right times to buy Berkshire. And I would start at 1.2 times price to book because Warren Buffett isn't a sneaky guy. He's telling you exactly where he wants to buy shares back at, and that's a good use of his capital at that point, and that's 1.2 times book value. So I'd wait for a little bit more of a pullback in the stock price before I started to do that. And actually, the other thing is the $500 billion number was based on the end of the year. Since then, stocks have gone down a little bit. So you have to go reevaluate the company on where it stands right now. And I would just be cautious on that. But in the meantime, if you can sit there and buy the company for under 1.2 times book value, you should probably do okay according to Warren Buffett.